All right, let's talk about something uncomfortable. Why do you always lose when you trade? You hear this all the time. Every time I enter a trade, I lose. Why is it that I always lose? Is it because you're picking the wrong side each and every time? Statistically, pretty improbable. From my experience, this usually comes down to one thing, and that is position sizing. See, how you behave and what actions you take after you enter a trade is really based upon how much money you are losing or stand to lose. It's very hard to look at things objectively when you are losing a ton of money, more than you are comfortable with. So if we take a look at an example trade here, I'm just looking at the S&P 500 futures. Let's just say that you identify this as a demand zone, a support area, right? If you decided to long from this area here once we hit support, but the market makers go looking for liquidity as they usually do, and we wick all the way below this, if you're in a much bigger position than you are comfortable with, you're going to be panic selling. Now, what happens after the market grabs liquidity? Well, then we go back up again and you miss out on your trade and you're like, oh shit, this always happens to me. I sell too early, I lose, the market ran without me. Assuming you are familiar with the basics of market liquidity and why support and resistance levels routinely get broken and wicked before the market actually goes in the direction that you guessed, if you were in a manageable position size, then you would be a lot more objective about this and you could afford to wait until that liquidity event happens and you are much less likely to panic. So I bet it's not that you're always picking wrong. Again, statistically, that's improbable that you, out of everybody, picks the wrong trade each and every time. And that usually boils down to how big is your position size and whether it is comfortable or not for you.